Well, good morning. It's November 21st. It's Thursday, and I want to show you something. Usually I just paraphrase this for you, but I want to show you this. I look at this report. This is the global market report, and it usually comes out at about, I would say at about 7 a.m. Eastern time, about 4 a.m. Pacific time. Now, when I was in LA, I would get this really late. For some of you who don't know this, I moved from Los Angeles to Florida about a year and a half ago. So it's very different for me looking at the market after 24 odd years at a different time zone day to day. But it is kind of interesting, and I love it better because I get to see things earlier. So first thing I see this morning, and again, I'm getting kind of tired of saying I told you so, and this is, if you look back at my videos, and I post videos every day, and I get very specific about the things that need to be looked at. World shares dropped Thursday as anxiety mounted over the possibility that U.S.-China may not reach a trade deal before next year. Several reports suggest that U.S. and China are struggling to reach a preliminary Phase 1 trade pact and may, kind of got away there for me for a second, and may not be complete this year. That's very, very bad. Investors have been hoping two world biggest economies can reach a deal, blah, 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 blah. But doubts over the talks have grown after U.S. congressional passes resolutions expressing support for human rights in Hong Kong, where political protests have dragged on for months. So there are renewed concerns. Let's leave it at that. Now, the reason why the stock market went for the last month, this is the SPY. So if you're looking at the SPX, the index versus the SPY ETF, just add a zero in the end. So instead of 392, it would be 30,920. 3,000, not 30,000, 3,920 or 3,092, so forth. Just add a zero in the end. But we're looking at the SPY ETF, which is the most liquid ETF that tracks the S&P 500. This move here was a result of the belief that U.S. tariffs were going to be worked out right here this year. And right now, it doesn't look like Phase 1 is going to be complete. And yesterday, and I've been telling you, if you've been following me every day, this is not news for you. I've been talking about this for the last 2-3 weeks. The bond market rallied really well. We had an option that we bought around here. We made a little over 112%. We closed it out here because I figured the market may pull back. I'm going to get back in, but I'm going to be long bonds. I believe bonds are going to top out right around 150. This is the TLT ETF. It tracks the bonds. So I'm just looking for positioning. Maybe today, maybe tomorrow, but I'm looking to go long again. But we made from right here to right here, two of our programs made 112 point something. I don't want to lie to you, but over 112% return in literally just a few days on an option position. And it was a cheap option. It was just a few dollars. So it was a couple $100 investment. You doubled it. And again, I've been telling you this as the market was over here. There's no surprises here. Looking at the broad market, let me show you the broad market. We still remain largely overbought. Volume is still not rising, and I'm expecting us to move down to the 50-day line or go to the twilight zone, which is between the 50-day and the 200-day line. Now, if you look at this is the percentage of stocks in the S&P 500 trading above the 200-day moving average. This is a chart. Let me show you. This is 2 years. Anytime over the last year, actually, this is 2 years. We've done it once. Momentum levels went higher only once on January 26th of 2018. Since then, they've been right around this level, even as early as April of this year. Notice every time momentum levels on the S&P come up to about 73, 75, 75, 74, 74. Market cools off and goes to about the 50th percentile. If this is true and if this is happening, then you're going to see the S&P 500 at the 200-day moving average or slightly above the 200-day moving average, which I expect based on this overbought market action and the fact that volume has been declining so rapidly over the last few quarters. Okay, this is not few quarters, the last quarter. Okay, August 170 million, 150 million. Now 46, 35, 49, about a third. Let's say a little less than a third, but over half compared to August, not December or August, the slowest month of the year. And this should be a fairly busy time right here, October. September, October, November, this is a busy time for the market. So I'm not happy with what I'm seeing. Unfortunately, I'm not seeing anything new. So I may start sound like a broken record, but there's money to be made if you're trading defensively. Now, potential upside, the small caps, which will be the first to rally, they were the first to drop. They made an all-time high. Markets, S&P made all-time highs a few days ago. These suckers haven't made an all-time high since over a year ago. They're much more sensitive to China. So the first to go down is the first to rise. They're much more speculative. Don't tell anyone our little secret. I'm just messing around with you. Smaller stocks are more speculative. More speculative stocks tend to go down and go up before blue chips because they're more speculative. There's more action involved. There's more gambling involved versus investment. And I hate to use the word gambling, but you understand where I'm going here. Swing trading, short-term speculation, much more speculation, and speculation prices things ahead of time. So what do I expect to happen? VIX, volatility index. You could trade this. You can buy options on this. I'm not telling you what to do, but every time the market comes down to the 200-day line, VIX goes up to 20. It's at 12 right now. Just saying. Also, if you don't like bonds, utilities are defensive, and they're still below the 50-day moving average. And if the market goes down, there's a good chance utilities will spike and make new highs, and the bond market. So, to summarize, Fed doesn't have anything to give us. They said, we're done. Kitchen closed. No soup. We're done. Bye-bye. Trump called, no. He said, no, we're not doing anything. The summoning to the White House did not prove fruitful. Fed says, no, we're done. Economy's doing well. We already lowered rates 3 times. The last time they lowered rates, which should have caused the bonds to go up, bonds went down, but we don't talk about that. Fed is useless right now to help us against China. Useless. Trump is putting himself in a corner. Elections coming up. Their campaigning is already going on. We're less than a year away. If China doesn't work this out with Trump, it's going to impact the U.S. stock market. And it's going to put Trump in a corner and make him force him into a position to negotiate on terms that are less favorable if he wants to be reelected and he wants the stock market to continue rising. And I still haven't even mentioned the impeachment, and it's not getting prettier. Now, I hope it all works out. I hope nothing happens because it's not good for presidential drama to occur. It's not good for the stock market, and I want the stock market to make new highs. So I'm expecting the S&P to have a nice little cushiony downslope, come down to the 50-day, 200-day line right here, maybe a little lower. The fragmentation which we are seeing in the sectors, in the various sectors, will go away at that time. That's what goes when the market's stretched out and volume's low. All the sectors are like this. They're just moving in different directions, and that's not going to cause a sustainable level of momentum. So now there's ways around it. I just showed you a way. I made over 112% on a bond position. I'm doing a live training next week. It's going to be live. It's going to be really, really cool. All right. And I'm going to show you how to grow your wealth. I'm going to show you how to potentially make 10 times your money. That's right. No jokes, no gimmicks, no nonsense. This is going to be all new. You've never seen this before. You've never heard me talk about this. There's no cost. There's no hidden fees. There's no anything. Sign up, learn how you can make up to 10 times on your money. All right? 10 times. All right? It's simple. It's effective. Live training next week. Click below to find out. Do it now. Don't delay. The biggest impediment to financial success is procrastination. Sign up for this live workshop. It'll teach you something really cool. You'll get to spend an hour with me. You can ask any questions. I'll be there for you. Talk next week. Bye, guys.